Now, first up, to share his views on the future of the fund industry, and SKAGEN in particular, is our very own CEO, Mr. Tim Warrington.
Ole Christian, thank you very much indeed. Ladies and gentlemen, good morning. Happy New Year, Tack för det gamla, and nice to see so many of you back for another session. I did so well last year that they've given me a whole 8 minutes to update you, to set the scene, and to say a little bit about SKAGEN and what we see around the corner. I think, though, first of all, I should look a little bit further back and say 10 years ago we entered a new decade, and this was the image that The Economist gave us in one of their covers in December 2009. And of course, as we exit the decade and head into a new one, this is what we have from The Economist. I'll let you make your judge as to which picture you prefer, but clearly some things change, some things don't change. And one thing that sadly isn't developing in the right direction is this. Again, this is a picture back from 2009. That was the pledge that was made globally that we were going to do something about it. And here is where we are at the end of 2019. So clearly, work still to be done. And I think that if we reflect on one thing for 2019, it is that sustainability and ESG went mainstream in the financial industry really for the first time and is now a factor that cannot be overlooked. But how did the markets perform, the capital markets, in 2009? When we last met, we were just recovering from a pretty sharp turndown at the end of the year in the fourth quarter of 2018. And clearly, global markets recovered strongly throughout 2019. And certainly that was driven primarily by the United States and indeed by big tech in particular. There were headwinds, and in the second half we all experienced volatility, and that was driven largely by the spat between China and the United States over trade, and of course the emerging markets suffered more than most. But those of you who stayed calm and carried on were rewarded with the best returns in equities for a decade or so. The central banks supported us, by and large, with looser monetary policy and interest rate cuts. There were some outliers, of course. I don't know how many of you picked up Austria's century bond. At its height back in August, it was trading, I think, over 80%. That's for a bond with a coupon of around 2.1% and a maturity in 2117. It's amazing what people are prepared to invest in. And I hope those of you that picked up my wine tips last year were following the market. This year, it was Italy that was the winner, and Piedmont in particular, and a 2002 Barolo. A case of 12 now comes in at 120,000 krona, and I'm sure some of you in the audience can afford that if you've been invested in SKAGEN this year. But sustainability wasn't just in the news for what is happening within asset management. It also had an impact in the capital markets. And we can see here that palladium, which is used in catalytic converters primarily, third straight year at the top of the commodities chart. And indeed, top of the commodities chart, 5 over the last 10 years. Sadly, though, the biggest performer in the commodities chart over that period, the single biggest annual rise, is coal, 130% or so in 2016. So there really are some asymmetries here. But it wasn't just palladium. Balsa wood was up, almost doubled. That's a key component for the building of wind turbine blades. But what about SKAGEN? The life of an active manager, if you read the newspapers, whether it's at home here in Norway or abroad, is a pretty tough one at the moment. And the life of a value active manager like SKAGEN, tougher still. So it was very pleasing that in 2019, we were able to see 4 of 6 equity funds hit all-time highs. And if we turn first of all to SKAGEN's larger funds, Really, the big winner for the year, shown here in green, was SKAGEN Global. It again beat its benchmark for the second year in a row by the biggest margin since 2010 and with the best absolute return for the fund since 2005. SKAGEN Vext, shown here in the darker blue, performed well against Oslo Børs, but in common with SKAGEN Kontiki, shown here in the lighter blue, it suffered stock level weakness, particularly in the energy sector during the second half, and it had a fairly rough time falling back against its benchmark. Looking at some of our slightly smaller funds, SKAGEN M2, I think most would agree, cemented its position as the world's best listed real estate fund with a very solid absolute return and a quite superb relative return against its benchmark index, beating it for the fourth straight year. SKAGEN Focus was hampered primarily by its very price-driven strategy. You can see that here in the darker green. But indeed, SKAGEN Focus really picks up and turns any time there is discussion about a rotation back to value in the market. And SKAGEN Insight, our activist fund, had a very challenging year, an okay absolute return, but in common with the activist investors that it shadows, it had a very difficult 2019 when measured against its benchmark. What then of our fixed income? Certainly, SKAGEN Høyrente in yellow and SKAGEN Avkastning, they did exactly what it says on the tin, and they performed well against both peers and benchmark. And then SKAGEN Tellus, shown here in the dark green, well, if like many here in Norway, you use SKAGEN Tellus to hedge the NOK, and you were wise, then I think you had a very good year indeed. But what about SKAGEN? How has 2019 played out for us? Well, I think I would characterize 2019 as a year of stability and a year of productivity. We got on with running the business. On the investment side, we had a very stable platform throughout the year, but we did add additional analytical capability to the platform. We migrated to a common operational platform together with Storebrand, and that is now up and running. In sustainability, we kept pace with all the developments that we saw in the market through 2019. It is an integrated part of our investment process in SKAGEN. It has been for over a decade. During 2019, we provided additional clarity over our approach to preventing deforestation. We made a commitment to fully divest from coal in a phased way by 2026. And we introduced a policy towards excluding investment in recreational cannabis. Our active engagement with portfolio companies was very high indeed. We were agitating with 17 separate corporate cases in our portfolios in 2019, and one governmental case where we were engaged with a foreign government. And we will report in detail on that to our clients in a report to follow later in the next couple of months. Our voting record remained very high, and we were voting on in excess of 95% of the votable items in all of the companies in which we invest. And indeed voting against management in line with our policy when the situation or the issue demanded it. And then finally, together with Storebrand, we launched a number of funds in Luxembourg for our international and overseas investors, and that was a relief to us in SKAGEN because we've only been trying to do it for 10 years, so it was good to finally get that done. So what about this next year? I think I will leave it to brains larger than mine to posit on what is going to happen in the capital markets, and you'll hear from one of those in a moment. But within SKAGEN, certainly we expect that the sustainability issue will continue to develop and gain pace. I think the issuing of the European Commission guidelines, particularly on the EU taxonomy for sustainability, will have an impact. Hopefully it will get rid of some of the greenwashing that we see in the market, and hopefully it won't have too many unintended consequences, but they do exist. I think we should expect a mad rush of product development on the back of this, and some competitors are going to produce all shades of sustainability. You won't see us doing that. Fund fees are always under pressure, particularly for active managers such as SKAGEN, and certainly they are in flux in the Norwegian market at the moment. The changes are being prompted primarily by MiFID II, although I think it is appropriate for banks to look at their fees when interest rate margins are at historic highs, and I'll say no more about it. For SKAGEN's part, we have been compliant with MiFID II and distributor share classes and so on, really for over 5 years. We were the first to do that in the Norwegian market. But we will continue to focus on fees to ensure our clients get value for money. We want to continue to have that very clear alignment with our clients. When they do well, we should do well, and when we do not deliver, they should pay less. And I hope that that will continue to meet with our clients' approval. And then finally, we will focus, as we have been doing through this year, also on advice and the provision of advice to the direct consumers that we have who invest their own money with us. There's recent research now out by both Morningstar and Vanguard that is suggesting that the value of advice can actually now be measured, and that advice is worth between 1.5% and nearly 4% in annual return. And we think that that is return that our clients should be getting. So expect us to see, to put additional effort into advising our clients. Well, I think that's 8 minutes, give or take. The clock says 3.5 minutes, but I think it's broken. My message to all of you before we go into the main part of the conference is that SKAGEN is firmly on track. We are confident and we are optimistic about 2020 and beyond. Please enjoy the conference. I look forward to meeting as many of you as I can during the course of the day. Please do come up and speak to me if you want to share your views. I hope you have a very good day. Thank you very much, and tack for mig.